In this video, I'll be going over my entire $361,000 investment portfolio. What's up guys, Sean here. Welcome to my channel where I talk about self-publishing, building passive income streams, and retiring early, and the many lessons and failures I learned along the way. So if you want to follow me along in this journey, make sure to subscribe and turn on the notification bell so you don't miss out on any upcoming videos. So if you've been following me on this channel, you know that I mostly talk about self-publishing, but I want to kind of change it up. I do want to talk about my other passions such as personal finance and investing because I'm a big fan of this movement called FIRE, which stands for Financial Independence Retiring Early. And that is my big goal as well. I want to retire early. I don't want to retire when I'm 60 or 70, like, what is considered normal right now. So there's a big movement called FIRE where people talk about different personal finance tips, strategies, and just, connecting with others and trying to figure out how to retire early. So once I learned about that whole movement, I got hooked. It definitely aligns with my goal. So I got into it as well. And I started investing in the stock market around 3 years ago. So over the past maybe 6 years or so, I lived extremely frugally when it comes to lifestyle and saving everything I make from my business. And around 3 years ago, I started investing that into the stock market. So in this video, I'm going to go over exactly how much I have in the stock market, how much I have in crypto, and I also have a little bit in real estate too. So I'm just going to show you my breakdown of where I put my money in, my thought process to it. Quick disclaimer is that I am definitely not a financial advisor. This is not financial advice. I don't even consider myself to be an expert in personal finance. This is just for entertainment purposes only because I really enjoy when other people make these kind of videos. So that is why I wanted to make it myself. And perhaps this is something that I can update you guys every month or every couple months, but my current goal is to get to $1 million in invested assets because this is how much I have invested, but I actually have a lot more in cash, which is horrible. So I want to invest my cash into these assets as soon as possible. The goal is 1 million because once you hit the 1 million mark, what you can do, or you can do it anytime, but basically there's this thing called the 4% rule. So since if most of your investments are getting around 7 to 10% a year, if you put it into index funds, and it grows 7 to 10% a year, and if you only take out 4%, right? But the stock market is growing, your value of your assets or your investments are growing 7% a year. That means you can take out 4% every single year, but it's growing 7%, meaning you're not really touching the principal. You're not really affecting the total balance you have in the stock market. So once you have about $1 million and you take out 4%, that's around $40,000 a year. You can go move to Bali or Thailand and 40K is enough to live off of. Obviously, I'm going to have more than that. My goal is much higher, but that is typically what people do when it comes to the FIRE movement. So anyways, enough talking. Let's get right into the portfolio. So I'm going to start off with the smallest account, which is my Robinhood account. I only have $1,308 in it. The stocks are tanking today, so the amount might be actually lower than 360K, which is going to be the video title. But when I made the video outline, it was 360,000. But I basically just use this Robinhood account as a play money. So I only have stocks for Delta Airline, Norwegian Cruise Line, Royal Caribbean, and Carnival Cruise Line. So you can see it's all cruise line and airlines. This is more so just like play money again, gambling on these airline and cruise line stocks when COVID hit right around March 2020. And it definitely increased a little bit, right? Because I put in $1,000, so I made $300 over maybe 2 years right now. So, I'm just holding on to it, but I really have not a lot of hopes in terms of making a ton of money. It didn't really recover as fast as I thought it would, from COVID. As we all know that it's kind of dragging on, longer than we thought. So I'm just going to keep this money here. Not much plans otherwise. So the next one is Acorns. So I don't really recommend Acorns anymore to people because they take out the $1 a month in fees. And there's other better apps like M1 Finance, which is my main one right now. But Acorns is what I actually started with 3 years ago. And you can see that I have about 7,000, so basically $8,000 in my Acorns account, get paid dividends, a couple cents here and there. So not too often, but what's cool is, I made a gain of 40% over the lifetime. So made around $2,236. In terms of the investment portfolio, it's moderately aggressive. So it's 20% bonds, 80% stocks. With Acorns, you can't really choose which stocks to invest in. It's just choosing a risk portfolio, and then they invest for you. So I don't really know what they're buying up here, but that is with Acorns. Now, for both Robinhood and Acorns, if you guys want to check it out, the link is below the description. I think Acorns is offering $5 if you sign up for free, and Robinhood is offering you a free stock of up to however much. So it's kind of cool just to sign up and get the free bonuses. The link is below this video. So the next one is my Roth IRA account. For these retirement accounts, I do not want to show you my account directly, so I just took a screenshot. As you can see here, I've been investing in a Roth account. You can only put $6,000 every single year, but the timing for me when it comes to investing in stocks has been pretty good. So I invested a lump sum of $6K right before the tank, in March 2020. But after that, it came back pretty good. And it has a balance of 26 or 27,000 with a return of 21% overall. And basically the portfolio wise, I just invest in VT-SAX. So VT-SAX is a total stock market index. So it basically covers the entire US stock market. It is definitely the most popular in terms of index fund. Even in the FIRE community, everybody kind of goes with VT-SAX. It has a very good track record. So I just go with VT-SAX. Again, the risk is very low because it's covering the entire stock market. And so you can pretty much just dump it in index funds or dump it in VT-SAX and forget about it. And that's kind of the approach that I want. I don't want to study the stock market, look at charts and stuff every single day, spending my time and to think, when should I sell? When should I buy? That's not what I want to do. I just want to dump it in index funds and forget about it, right? Because I have other businesses that I would rather spend my time and make money from. So that is with my Roth account. Now, if you do not have a Roth IRA and you're under the age of 40, I highly recommend you get started because it's the money that you make from the Roth. So the gain that you make when you take it out, you're not paying taxes, and that's the main benefit. Is it's a retirement account. So Roth IRA, it's you put in post-tax money, but you do not pay taxes when you take it out. So that's the huge benefit. As you can see here, I made over close to $8,000 in returns. So if I take that out, that is tax-free money. So the next one on the screen is my solo Roth 401k. So this is something you can only open if you have a S Corp, but I opened it under my S Corp, and I am also, I converted into a solo Roth 401k instead of a solo 401k. So the difference is you either save money pre-tax or post-tax. With a 401k, you do not pay taxes when you put it in, but when you take out the money, you pay taxes. With a Roth 401k or a Roth IRA, you pay taxes initially, right? So you put in your post-tax money, but when you take out the money from the account, you do not pay taxes. And the big difference is you have all this time, right, for your money to compound and grow while it's invested into the stock market. So I rather save money when I take it out, because when I take out that money, it has grown to so much bigger than what I initially put in, right? So I'd rather save money there. So that is why I chose a Roth for both, 401k as well. But in terms of what I have invested in, you can see that I got a little bit of Apple. So I really like Apple. The ones that are down is ARK, so ARK Innovation Fund. This actually did pretty good, but every single ARK ETF is doing horribly right now. I don't really have any intentions on selling it. Again, I really like the approach of just buying and forgetting about it. That is why I mostly buy index funds. Sometimes I buy individual companies like this that I personally use and know that it's going to keep going up. But again, I'm not an expert or anything like that. I just buy companies that I know personally from experience, and I just ask myself, do I see the company growing in the future or not? So I don't really do a lot of technical analysis. It's more so just, personal experience, right? So it could go down for sure, but it's a risk that I'm willing to take. 80% of my money is in index funds. It's only the 20% that I kind of play with my individual stocks. So you can see the next one is Facebook. Facebook is going up. I believe Facebook is going to keep growing as well, expanding into the metaverse. I think there's a huge opportunity there. Now, the next one is JP Morgan. So JP Morgan has gone up. I bought it at a good time. Right now, I think it's a little overpriced, but that is the next one. SPHD is basically a index funds, more so focused on dividend payments. So that is the only dividend stock that I have. Everything else is focused on growth, because if you compare dividend investing and growth focused investing, basically the difference is if you're young and you have a lot of time for the stock to grow, growth investing is better. So in terms of returns, right? So the overall returns is better with growth investing. But if you're older and you don't really have a lot of time for the stock to grow in the market, then you can focus more on dividend investing. So the next one is VOO and VOOG. So it's very, very similar. There's a little, or not even a little, there's a lot of overlap when it comes to these three stocks. So VTI is basically a ETF version of VTSAX, VTSAX that I just showed you. So it's exactly same. It's just the ticker symbol is different, okay? But it invests in the exact same thing. So that is a total stock market index. Now, VOO is the S&P 500, so it's the 500 top companies in the S&P. And then VOOG is, I guess, something similar to that, but more so focused on the growth, like companies that focuses on growth. So you would think you will make more or better returns from this growth index, but you can see here that I made less returns from this growth index compared to VTI or VOO. And that's probably a lot to do with timing, right? Timing of when I invested into. But since I don't see a lot of difference in terms of these stocks, I'm just going to stick to VTI and put everything there. So VXUS is the international stock market index. And this has not been doing so well pretty much ever since I invested in. So they always say that you want to diversify from just investing in US companies to a little bit of international companies. So that's what I do here too, but it's just never provided a good return. But anyways, overall, I have $48,656 invested in my solo Roth 401k. It's a little more because you can put in basically $19,500 every single year for your solo Roth 401k. So it's a lot more than your Roth. So I'm putting in a much faster rate. And the overall gain is 25%. And the overall gain in terms of dollar amount is $9,600. All right, so the next one is M1 Finance. So that is pretty much my favorite stock investing app. So I highly recommend you guys go with M1 Finance. So it's just easy to use, and I like the pie chart and everything. So you can see I have a total of $161,000 invested so far with an overall gain of 52% and $17,000 in terms of dollar amount. So I pretty much separate two portfolios or my portfolio in two sections. So this is a 3-fund portfolio. This is the most simple setup you can do in terms of index funds and investing in the stock market. Go look up 3-fund portfolio. Again, historically returns are not much better, but it pretty much just follows the US index, and oftentimes the returns you get from just dumping it into index funds and forgetting about it is better than picking individual stocks, because a lot of people lose money from individual stocks, right? That offsets the gain that they make. So I have 85% in VTI. Again, this is VTSAX, total stock market index, 40% overall return. And then a little bit in real estate ETF and some international stock, international index that is not doing so well. So that is my 3-fund portfolio. I have about $100,000 there. And then I have what I call the growth titans. So these are companies, it's pretty much tech stocks. So it's not diversified at all in terms of different sectors. But again, I don't invest in stocks that I don't understand. I really only understand tech stocks, or because I personally use it. So that is what I invest in. The best one is by far Apple, 177% return. So that's amazing. And then the next one is Microsoft, JP Morgan, Wynn Resorts. So this is See, this is what happens when I invest in something that I don't understand. Is because Wynn Resort, I personally never been to it, never even heard of it before. I was listening to this one YouTuber and then he was hyping it up, so I bought it, and you can see that it goes down, right? But it is a travel, stock, right? So once COVID kind of calms down, hopefully it'll come back up. I'm pretty hopeful with that. Facebook, and it's funny because Amazon is going down pretty heavily, so I might buy more because I really believe Amazon is a great stock to kind of hold for a long time. So Tesla and Google and Upwork. So Upwork is a good one too, although it's going down a little bit. So that is the M1 Finance account. If you guys want to get started with it, the link is below this video. So in terms of just stocks, I have $254,000 as of when I'm making this slide. So it might be a little different from what you just saw, but that is the estimate amount of what I have in stocks. Now let me show you crypto and real estate. So this is my BlockFi account. I pretty much just have Bitcoin and Ethereum. So again, you can kind of tell that I'm a very conservative investor, and I pretty much like to have my money in index funds and then a little bit in crypto. I don't really like to take a lot of risk. So you can see that I just buy Bitcoin, Ethereum, put it into BlockFi because I get a very good interest. So the APY is 4.5% and 5% on Ethereum. So it's really, really good. So I like to just buy Bitcoin and hold it in BlockFi just for the interest. But the overall 1 month gain, let me see if I can change it to 12 months. So I gain about, doesn't really show the percentage here. Actually, in the past 6 months, it shows that I gained 207%. So that's awesome. That's really, really good. But, crypto is like up and down, very, very heavy. So we'll never know what would happen. But in the long term, I'm pretty hopeful that crypto will keep going up. I really think it's the future. So I am trying to invest more. So in total, I have $15,000 in crypto plus another $1,000 in different brokerage. So total around $16,000. Now the last one is real estate. So real estate, I just buy lands and flip it. So people pay me installment plans or people pay me in installments. So there's a lot of installment payments that people still owe me. So I'm counting that value. Plus I still have a couple properties with some, we build tiny houses on it to increase the value, and then we sell it. So these are some pictures that you guys can check it out in my Instagram. So it's a very simple tiny house. It's nothing like crazy like that, but it does increase the value a little bit. And so basically the value of the property that I have plus, the amount of payments that people owe me in installments, it's around $90,000 for the real estate portion of things. So if you combine that $90,000 from real estate, around $16,000 from crypto, and then I think it was like $250,000 from stocks, that is my total invested assets as of now. And again, I'm trying to put much more into mainly focus on the stock and crypto side of things because it's much more liquid and much more easy to invest in than real estate. So that is going to be my next focus. I have a lot of cash coming into it. So it's kind of good that the stock market is dropping right now because I am happy to invest more into what you just saw. So another thing though is I'm actually going to start doing crypto trading bots. I think it's just an experiment. We'll see how that goes. So if that goes well, I will update you on a video in the future. But that is it for the video. Hopefully you guys found it entertaining. I don't know if it was educational because I'm not, again, an expert in this. I'm just kind of sharing you, what I'm up to in my journey. So if you like these kind of videos, let me know in the comments and I can make more like personal finance kind of videos in the future. But if you enjoyed it, leave a like as well as subscribing to the channel. And if you guys want to learn how I make money from Amazon publishing books that are semi-passive income, then I'll have a link to my complete KDP course below this video, as well as links to all the trading apps that I recommended in this video. Thanks for watching, and I'll see you guys in the next one.